Hey rich friends, welcome back to the channel. Are you unknowingly making the following mistakes in your 30s that would definitely ruin your future? The choices you make in your 30s can either set you up for a great future, a wealthy future, or can completely derail your financial goals. And these mistakes are very common, which is why you should not let them derail your future. For most people, this is the decade in which they are finally hitting a stride in their career. They are thinking of settling down, starting a family, maybe buying their first house, having their first kid. And they're faced with a lot of financial decisions that could either make or break long-term wealth. Also, in your 30s, the stakes are typically higher. You are no more in your 20s that you could just waste and forget about. The decisions you make now, can impact yourself, your future generation, and your life trajectory for the remaining decades you have to spend here on Earth. Your 30s are the years in which you really need to get serious about your financial life. And I'm speaking from experience here. Also being in my 30s, I know how important it is to make sure that I'm making the right choices and I'm spending my money the right way. And that's why in this video, I'm going to go over 5 common financial mistakes that I want you to avoid, as well as lesson and practical tips for avoiding those mistakes. Every mistake in this video is very important, but I think the 4th and the 5th one are so common and they're so crucial that you definitely do not want to miss them. If you are new here, welcome. I am a chartered financial analyst and a former investment banker who spent over 7 years advising millionaires and billionaires on how to make, keep, and grow their money. And on this channel, I love to share practical tips for you to also get rich and build wealth. And the very first mistake, and you'll be shocked that a lot of people make this mistake, is not having an emergency fund. Yes, statistics show that the majority of Americans do not have up to $1,000 in savings. If you're in your 30s, this is a massive mistake. And I made this the first point because if you do not have up to 3 to 6 months in emergency fund, stop everything. Stop everything. This should become your most important goal. Many people make this mistake because they feel like, an emergency seems like something that is far away, it's not going to happen. And because it's so far, it's not tangible, it's very difficult to think about it. So they save money for other things. They save money for a down payment on the car, save money for a down payment on the house. They save money to go on a trip, to buy a bag, to do other things, but they forget about an emergency savings. And this is so crucial because, again, in your 30s, you're making these big life decisions, you're buying a house, you're having a kid, your emergencies get more expensive, and many people are one emergency away from being broke. So not having an emergency fund, it's the number one mistake that you can be making. And how can you fix this? It's very simple. Start saving your money. Identify what your monthly needs are and make sure that you're saving 3 to 6 months of this money in a high yield savings account. I have multiple videos. I have one video about how to build an emergency fund. I'm going to link it up here. I have videos about high yield savings accounts that you can open. I'm going to link it up here with ones that will give you really high returns, like 7%, things like that. I'm going to link that up here. I also have videos about the 6 core accounts that you need to have if you're stressed about building wealth. I'm going to link that up here as well. There's a wealth of resources on this channel that help you begin putting together your emergency fund. Now, moving on to the second mistake. Now, this mistake is so easy to ignore. It's so easy. For most people, it's an afterthought. You don't think about this mistake until it's already happening. And even when it's happening, you don't realize the impact of it except you think about it in aggregate. Now, what is this mistake? This mistake is ignoring tax optimization. Yes. For most people, taxes are a normal part of life. You go to work, you get your salary, you get taxed. For most of us, you don't even know how much you're paying in tax until the end of the year when you're filing your taxes, when your company gives you your W-2. And this is like taxes. You get paid when you start a job. They'll tell you hey, your annual pay is 200K, for example. But what actually comes into your account every month is not 200K. It is 200K minus the tax that has already been taken. Now, for most people, if you don't have a business, you can't really do much about the taxes that you pay on salary income to the government. But if you're in your 30s, you are probably already investing, right? Maybe you have an ETF, you have an index fund, you've invested in a few stocks and other things like that. Now, the mistake you could be making is not realizing that each of these investments, a high yield savings account, stock options, all that, they have tax implication. And then you find yourself at the end of the year, when you're filing your taxes, you are paying the government thousands of dollars in taxes. or the government is owing you thousands of dollars in taxes. Yeah, some people get like tax refund. I used to get 5 figures in tax refund from the government. That is not optimal. And like, this is a common mistake. Many people avoid it. You don't even think about it. Everybody hates like filing taxes. It takes a long time. But then you file your taxes, you see how much money you're paying, you feel the pinch in that moment, and then it's so easy to move on and forget about it until the next year without looking at what are the investing actions I'm taking that is leading to this amount of taxes. How can I optimize my tax? How can I reduce my tax? Evading tax is a crime, but reducing your tax, like, that's a legal thing. And there are legal ways in which you can reduce your tax. There are legal ways in which you can efficiently, manage how much tax you are paying to the government. And ignoring this is basically giving free money to the government, leaving money on the table. I'll probably make an in-depth video about this soon. My first advice is, if you are paying the government more than like $30,000, $40,000 a year in taxes, and you have multiple streams of income. So you have maybe a salary, and then you have dividend income, you have capital gains income, things like that. I first advise you to consult an accountant, like a tax advisor. There are many tax advisors that you can contact who would look at your last tax filing, look at your investment, and recommend for you ways maybe to file your tax properly and reduce your tax burden. But from an investing side, a finance side, I can provide some advice. The advice I'll provide is look into investing in things that reduce your tax liability. Yes, you can reduce your taxes by reducing your tax liability. The government applies the tax percentage on your taxable income. So if you can reduce your taxable income, you can reduce your tax liability. And how do you reduce your taxable income? By maxing out your 401k, by maxing out your retirement account. You are putting more money from your income today into your retirement account tomorrow, which reduces the taxable income. So it saves you money. You're not paying extra money to the government today. And you are also investing for the future. There are many different asset classes you can invest in that are recognized as deductibles from the government, and those can help you reduce your tax liability. I'm going to make a more in-depth video about this because I think this is a topic that deserves a video on its own. If you are interested in this, let me know by putting reduce my taxes in the comment section below. And the more comments I get, I'll know how to prioritize, that topic in my video queue. The third mistake, and this is a very common mistake that everybody makes, is upgrading your lifestyle. Yes, in your 30s, you're like, I'm entering my soft girl era, I'm entering my big girl era, I'm entering my big boy era. Like, in your 30s, you're making a good amount of money. And it is so easy to begin to upgrade your lifestyle, especially as you're making those major life changes. You're having your first child, you're buying your first house, you are finally getting to a managerial position at work. It's very easy to be like, I'm going to become a manager, I'm going to reward myself with a Rolex. I just, got married, I'm going to reward myself with a massive 7-bedroom house. Like, upgrading your lifestyle is so easy in your 30s because, you're in your 30s, you're finally an adult, and you can spend money because you're working hard. But this is a slippery slope, and this is a trap. I have spoken about it multiple times on this channel, how upgrading your lifestyle is such an addictive thing. And I know because I have fallen, prey of this. I've fallen prey of getting a promotion and changing my wardrobe. Yes, I've fallen prey of like just any little achievement. I'm like, what am I buying? How am I celebrating this? And this is a mindset shift that you need to make. So how can you solve this problem? The first one is by disciplining yourself to put your extra money into your financial goals. That's step one. Another way to prevent yourself from making this mistake, and I've spoken about this in multiple videos on this channel, is to set a financial rich number, right? So for most people, having $1 million or $1.5 million in liquid assets, like your net worth, is a good number. So you can have that number and say, hey, I'm not going to upgrade my life past a certain point until I've hit this milestone. I personally have that goal where I'm like, okay, and this is an example. Let's say like your current lifestyle is like, and I'm making it very unreasonable. Let's say your current needs is like $500, which is unreasonable. You could say that I will keep myself at a $500 like monthly spend rate until I have $100K saved up or invested. And when you hit 100K, you can be like, okay, I'll upgrade my life to like $1,000 until I hit $1 million. So that way you are tying the increase in your lifestyle to an increase in your net worth. And I think that is a good way to upgrade your life. Only upgrade your life when your net worth, your assets, everything has kind of matched up to it. So that's a good heuristic to think about it. Moving on to the fourth one. Now, this fourth mistake, again, it's so subtle. Like, most people don't see it as a mistake because we are just not trained to think that way. The way society has trained us and taught us about money is actually meant to make us poor, to be very honest. Like, the average advice you hear about building wealth and getting rich is actually just going to make you poor. And that's why this mistake is so easily ignored, because most people don't even recognize it as a mistake. And the mistake is not diversifying your income sources. Yes, I said what I said. Most people will tell you, how do you build wealth? Get a job, reduce your expenses, save the difference, max out your 401k, max out your IRA, invest for 30 years, and when you are 67, you have $1 million in assets. That is the generic advice on how to build wealth. And that is, I won't say it's rubbish. It's good advice. It can work. It does work. There are proven people who have put their head down and worked jobs for decades and became millionaires in their 60s. The unfortunate part of that advice is by the time you become a millionaire, first of all, there is the purchasing power of your money. $1 million today is not something as $1 million in 20 years from now. Boom. Step two is like, what about you? What about your life? Like, you grinded for decades. You didn't take any trip. You did not buy any nice clothes. You did not live you just kept living frugally, right? To postpone that to your 60. And then when you're 60, you're old. Just why? Why? Like, and this is a mistake because this is how society teaches us. Most people saw their parents be middle class, building wealth in that way. The average financial book tells you to build wealth in that way, but it's a mistake. Not diversifying your income source is a mistake for many reasons. Beyond even just like the fallacy of save your money and enjoy your life when you're 60. Also, in today's world with so many layoffs, every single day there's the news of one tech company laying off his staff, another company out there laying off his staff. What gives you the assurance that you can work for one company for many decades? Like, nothing. Diversifying your income is so easy to do and so easy not to do that many people in their 30s make this mistake. And in your 30s, you are still young, you have time, you have energy. This is the time for you to think critically about how you can expand your income sources. And even if you're in a company that does not lay off, the world is changing so rapidly. Industries are changing so rapidly. Like, AI is coming up. We are yet to see the full impact of AI on like people's jobs and people's productivity. Economic policies that come out all the time that can kill an industry from one moment to another. Sitting on one income, in one job, one skill set all your life is a mistake you should not be making in 2025. So how do you move away from this mistake? Just start. Think about how many skills you have. Think about problems you can solve. Research side hustle ideas. Research multiple income sources. It could be anything. Like, start small, but have a different income source. Have something else that is bringing you money. And that extra money you're making from that income source, yes, max out your 401k. Yes, put money in your Roth IRA. Yes, invest. But the thing is, like, you will be investing at a faster rate if you have 2 or 3 income sources versus if you have just one income source. So instead of it to take you 30 years, it may take you 10 years, it may take you 5 years, it may take you 20 years, right, to get to your wealth number than if you just focus on one income source. This last point is spicy depending on your culture, your religion. It can be very spicy. And that is taking too much financial responsibility of others. You're in your 30s, you're in your adult year, and depending on like your family situation, at this time, if you're doing well financially, people may begin to look up to you for help, for assistance. Like, you may have younger ones who want you to bail them out of emergencies, family members who want you to give them some form of money, different things. And you just may be a generous person who just likes to help people. And because, again, in your 30s are becoming an adult, starting a family, the income is increasing, you may fall into the trap of taking too much. I didn't say taking responsibility is bad. I just said taking too much financial responsibility of others. Now, generosity is great I would always be an advocate of being generous to people, but you want to be very careful here that you're not helping people while jeopardizing your future. And the only way to do that is to set boundaries, is to have a budget and to determine based on your budget, not based on other people's needs, not based on other people's emergencies, not based on your feelings at any point in time, because your feelings can be manipulated, based on hard fact budget numbers. How much are you able to give to people in a month? And then setting a boundary on yourself that you would not give more than you've budgeted on a monthly basis, no matter what happens. There are emergencies, yes. There are truly life and death situations that may warrant you to overextend yourself, but averagely, you should not be going above your budget when you are helping people or being generous. Always protect your financial goals first. Saying no does not make you a bad person. It only makes you a financially responsible person. And think about it this way. If you jeopardize your future now by overextending yourself to people today, what will happen is by the time you get into your old age, you get into 50s, 60s, you will become a burden to somebody else. It's like you're perpetuating a circle of poverty. It's like you're perpetuating a circle of just financial burden. So one person has to learn to provide for themselves into retirement so that the next generation does not have to carry the same burdens. I'm just the messenger. I am just the messenger. Let me know which of these lessons resonated most with you. And most importantly, let me know which of these mistakes you are going to stop in your life. If you finish watching this video and gotten to this point, it means I'm serious about building wealth. That's why, if you've not watched it yet, you need to go and check out my videos about the 6 accounts to build wealth. I'll see you in the next video. Bye.